if someone says to me, "Oh, well, my business, we grew revenue from $5 to $10 million this year," well, that sounds great. Like you doubled. That's awesome. I think my next question would be, well, what happened to your cost structure on the other side of that? Did it balloon? How did you get to that level of growth? Because if you're paying $5 for every dollar of growth, well, that's not a very efficient way to grow.
Welcome to the Business Ownership Podcast, brought to you by Awareness Strategies, helping you navigate the waters between entrepreneurship and ownership. Hey there, peeps. This is Michelle Nedelec, and I'm super glad that you're here with us today because I'm here with my most amazing guest, Eric. Eric, thank you so much for being here with us today.
Hi, Michelle. Thanks for having me.
Awesome. So let everybody know who you are and what you do for business.
Sure. My name is Eric Fiegoli, and I'm one of the co-founders of Expo Group. We are a growth stage consulting firm focused in the lower middle market.
Love it. How did you get into growth strategies as your thing?
Well, I wouldn't say it was a direct path, but I've worked in professional services for my entire career. So I started out of college. I worked in investment banking for about 5 years. So I started, the early stages of my career, really understanding and learning about the capital markets. From there, I went back, got an MBA. I spent a couple of years also working at Amazon, but really I felt like my background is heavily focused in professional services. And Expo Group really started from some consulting engagements that were spanning sort of beginning with my time at Amazon and then sort of going after that. So from kind of the initial work that I was doing on the consulting side, that is really how I started to learn about working with growth stage businesses. My business partner Kevin, who I still work with and co-found the business with today. He was working with some venture capital firms based here in New York City, and they really needed help on the finance side. So the work that we were doing was really going to support their growth. That was focused around accounting, finance, cash planning, projections, forecasting, budgeting, all of those things, those nuts and bolts things that you need to do as a growth stage business. We started to help them with. So my kind of beginnings were really around the first kernel of clients that we started working with. As we started to do well, as those clients started to do well, started to get introduced to others. And that's really how Expo Group was kind of born, was through those initial engagements and how we started to learn how to provide great service and great financial support and strategic support to these businesses to help them grow.
Nice. Well, before we get into yours, I got to ask you about Amazon because that seems kind of like a left turn in your career choices. So was that kind of in finances for Amazon, or were they doing acquisitions and things and you were in that?
Yeah, it's a good question. Definitely was a little bit of a left turn. I spent most of my career started in New York City and now I'm back in New York City, but spent my years out in Seattle at the headquarters. Few years out there, the product that I worked on, and I was a product manager at Amazon, so really on the tech side, but the product that I owned was a financial product in the sense that it was a package consolidation program. It was a customer facing program that gave customers the choice to get their packages in fewer boxes. So it was a feature that was beneficial for both the customers and also Amazon, because if you can get consolidated into fewer packages, that saves Amazon money. So there was a fair bit of logic on the front end to help display to customers when that option was available. And there was a fair bit of sort of math and finance that had to go into the back end to help Amazon figure out what the savings would be and if and when they would actually achieve savings from this option. So I think the product that I worked on was a really nice blend of tech and finance. And now going into my current role and the clients we serve, I do know a little bit about product management enough to be dangerous. And as a lot of the clients that we serve are in the tech or software industries, I understand how they grow and build their products out. And I credit my time at Amazon to helping me kind of learn those skills.
Well, I'm sure if they sold it as that, they would actually make more money because I think a lot of us would actually spend extra money to be able to get less boxes, less
That would
packaging,
be
less
me too.
materializing, less all of that stuff.
Me too. Me too. Yeah, it's a hugely important feature.
I love it. So when you're working with companies now, kind of what is there a sweet spot of kind of the size of the company, the industry, who do you love to work with, and or kind of narrow it in on that?
Great question. Yeah, let's cover that. So We work with a range of businesses, and I would go from they don't the type of financing. Portion of our clients are venture backed, meaning they've received capital or fundraising through typical venture capital firms, trading cash for equity. We also work with a fair amount of businesses that are backed by private equity firms, and sort of the key defining feature of those businesses would be that they're cash flow generating businesses a lot of the time. And they're also focused on growth, but they're sort of simultaneously focused on profitability. We also work with some owner-operated businesses, and some of those businesses are typically a little bit smaller, but they're profitable, and they just need a good finance team like ours to be able to guide them through their next stages of growth. In terms of the exact size, we work with businesses anywhere from a couple of $1 million in revenue, all the way up to 115 million dollars of revenue. We have some larger businesses that are private equity backed that we work with that sort of hit that upper threshold. And for those businesses, we're really working directly with a CFO that's in place, and we're really serving as the finance team under them.
Love it. So when it comes to businesses, I know in my experience of coaching business and executives, it almost doesn't matter the size of the business in my experience, that a lot of them will think, oh, but I'm not making enough cash flow or enough profit margin yet to get somebody like you to come in and be of service to them. Is that a fallacy? And if so, if not, let's go from there.
Well, I think it depends. I mean, a lot of the earlier stage businesses we're working with are not cash flow generating businesses. They may have gone and raised capital, and then the point of that capital is to then spend that capital efficiently for growth. So for those businesses, they might not be thinking about, okay, I can't go hire a CFO at this time who's going to be full time. But what they could do is hire a group like ours that fits a couple of different buckets. So we're going to be acting, as the fractional finance team, and that covers things like it could be accounting focused, controllership, FP&A, which is more around the financial planning and analysis. So think about like projections, budgeting, as well as some of the strategic financial things that you might want to think about around fundraising, growth objectives, KPIs, milestones, board and investor communications. We can kind of fill a lot of those buckets in-house with our group and our team. So we are a very sort of efficient way to, I would say, check most of the boxes or needs that you could have on the finance and accounting side. So I do think, a lot of times we can fill the role or fill multiple roles at the same time.
When it comes to kind of, you mentioned the fundraising, do a lot of the businesses that you're looking at, do they already have that as part of their kind of planning, or is it kind of, oh, we could do that? It's like a foreign concept.
I'd say it's a mix. Some of the businesses we work with are actually bringing us in post fundraising. Like they raised capital and now they're sort of sitting on top of their chips, and they're like, okay, we got to get organized. We need to have, we need to build infrastructure and some foundation around how do we do planning? How do we spend this money efficiently? How do we make sure we're trading growth for profitability, or whatever other milestones you might be thinking about. So sometimes, it's just post fundraising. Other businesses we work with are trying to evaluate their options. They could be thinking about fundraising. They could be thinking about, maybe they're a cash flowing business and they can use some debt and some leverage to grow their business. Maybe, I just got off with a client now that has a lot of debt, and they're thinking about options for investment and maybe trading some equity for potential capital, bringing on a minority equity partner. So there's a lot of different options in the market that we can help our clients work through. I think, main things that we focus on is sort of evaluating what's important to the client, what they're thinking about. Is it growth? Is it profitability? Is it a mixture? And then sort of charting out, okay, what are the milestones that we need to get to get them there towards those goals? And then sort of working backwards from that point to say, okay, what do we need to achieve over the next 12 months to get to those targets? So that's how we think about the growth planning with our clients.
So when it comes to that aspect of it, are there pillars or aspects that you guys go, okay, you guys need to understand this so that you quit making these mistakes, like those foundational kind of the information that you bring in that business owners just might not be aware of ahead of time?
Yeah, I think a lot of businesses are, I think, focused on growth, rightfully so. They're focused on growing revenue. But I don't know if every business is fully sort of has the full picture of sort of like what are they paying for that growth? What is the cost to that growth? Meaning, if someone says to me, "Oh, well, my business, we grew revenue from $5 to $10 million this year." Well, that sounds great. Like you doubled. That's awesome. I think my next question would be, well, what happened to your cost structure on the other side of that? Did it balloon? How did you get to that level of growth? Because if you're paying $5 for every dollar of growth, well, that's not a very efficient way to grow. If you're saying, oh, actually, we were pretty efficient, like we these are recurring revenue contracts that we think we're going to have for a long time, and we spent, dollar for dollar to acquire that growth. Well, that's very efficient growth. So I think helping them understand what the trade-off between growth and profitability or growth and capital efficiency, that's a big part of what we're trying to do because we want our clients to understand, hey, whatever your goals are, you're going to have to make a trade-off in order to grow, and ideally you want to do that in the most efficient way possible, or at least understand, or at least have an understanding of, hey, we are growing. It's not that efficient, but we have a path to getting more efficient.
Nice. So when it comes to the clients that you're working with, typically would they be looking at, hey, we just need more sales? Or are you looking at kind of, well, what about your marketing? Are you doing pay-per-click ads? Are you doing this? It's a B2C. You might be doing this, or mergers and acquisitions. Like, how do you kind of come in and approach their growth model and kind of optimize it?
Yeah, I mean, as the finance team, I mean, we're not, we we're takers of their business models. I mean, if they're a B2B business and that's how they're growing, we're not necessarily going to come in and say, hey, did you think about building a B2C channel? Or did you think about organic growth? But like we will bring ideas to the table around capital efficiency, around growth. One area that we always think about is segmenting their customers. So if let's say you come in and a business has 100 customers, all those customers are not going to be equal. Some of those customers might be growing, some of those customers might be shrinking. You might see that some of those customers were acquired very cheaply through efficient channels, some were not. So one thing that my team will often try to do is segment the customers into buckets to try and help our clients understand, okay, what are the profiles of these customers and what are the customers that we want to bring in more of? Because it's like they're not all created equal. And if we can start to build heuristics around what are the types of customers that we want to take on, that is really helpful in terms of driving the business decision and pouring more capital. So when you mentioned sort of like marketing, well, if you can segment the customers and figure out, okay, these are the right types of customers, they're sticky, they grow, they're big users of our products. If you can identify those and then start to pour more capital into those channels to acquire the right customers, that is where you start to really see some returns from those efforts.
Love it. So what would you say is one of the areas that you would love to focus on? Like when a client either has this problem and you get to solve it, that's nirvana for you, or when we get to spend our time doing this, that's what you love to do.
Oh, you mean for me personally?
Yeah.
I mean, for me personally, like I like, for Expo Group, I like growing the business. It's been, we've been running this for about 7.5 years. So I think an aspect of that I really love is sort of like the growth that we have had internally as a business. And that's not just from a client perspective or dollar and cents, but I also really love the team aspect. We have a fantastic team of almost 50 people here. So that group, I get excited about coming into work every day, working with them. They're really, really smart, much smarter than I am. The ideas that they bring to the table are exciting. They love working with our customers. So I think personally, the piece that I love is sort of like growing the business, fostering the talent and growth on our team, and sort of seeing their success. That's the piece I really love.
Love it. And then on the opposite end of the spectrum, are there any kind of pet peeves that you have about your industry that you wish people knew about?
Sometimes with businesses, everyone, it immediately comes down to a pricing thing. And this is probably not unique to us, but I would say in order to get good service, you have to pay. And sometimes I get on conversations with business owners and they're like, oh, well, I want a finance team, or can you help with this cleanup or accounting? And my budget is comically small, and I'm sort of like, that's fine. We're not going to be able to help you because our team is going to be really, really dedicated. We're going to bring a very high level of service and attention. But I think the idea of, like, sometimes you have founders, and this is maybe a startup mentality, right? Is you have to be sort of very, very, very tight from with a purse strings perspective. But I try to tell people, it's like, you're either going to do this work now or you're going to do it later. If you have cleanup work to do on the accounting and finance side, you're either going to do it now or you're going to do it later when you fundraise and people start asking you questions. There's no shortcuts. So sometimes when I get questions, or immediately, everyone's trying to do everything at the lowest possible cost, I sort of, just say, this will happen either now or later. It's more, and ideally, if you do it now, we'll be able to cut things off a little bit earlier. The longer you go, the messier things get. So I just try to impart that information on them, and try to bring some wisdom of, like, I've seen this story before. Things only get messier over time.
When you're opening up Pandora's box and it's like, oh yeah, that thing you've been avoiding. So we should probably address that at
Yes.
some point. Well, and I think too, they have a tendency to that when they have a founder operating company, they tend to look at kind of past finances and go, can I afford this? As opposed to what's the end game going to be? And can I work it into that budget? How do you help somebody kind of get over that mindset of kind of, this is what I have and this is what I'm spending versus this is what I'm creating, and that's what we're moving towards?
Yeah, look, it's the way you allocate capital as a CEO or founder is a very personal decision, and we're certainly not going to stand in the way to that. I think from my perspective, you do have to spend money to make money. And I would say, if you're investing money in your finance function, I think some people would look at it as, oh, it's a cost, right? These are capital expenditures, these are professional services. They're not really helping me grow. And I would push on that and say, actually, if you have a good finance function, if you have a good finance team, they're going to help you make decisions much more quickly. They're going to help you get to the decision points that you need to understand the dynamics of your business and grow faster, whether that's around growing more efficiently, helping you uncover or unplug some inefficiencies within your sales function, help you identify extraneous costs or duplicative costs, or think about a more capital efficient structure to grow with. So, I would sort of counter that and just say, hey, think about your investment in your finance function the way you would an investment in your marketing team, which, everyone can sort of understand that's towards growth. It's not necessarily just a cost feature of, this is going to be the bean counting. A good finance function is going to be forward looking. They're going to be proactive, and they're going to really be looking towards the next 12 or 24 or 36 months, and not just historical looking, and saying this is what happened. That's hopefully what you're going to get if you're with a strategic or thoughtful finance partner.
Right. You had mentioned the speed of their ability to make decisions, and that when you guys come in, you help them to be able to do that. You mentioned a few things in there, but I really want to itemize this because I think it's vastly important for CEOs to realize how important it is to be able to make not only decisions quickly, but to make good decisions quickly. So what are the factors that you would put into that equation to be able to make good decisions quickly?
Sure. So one thing that we almost always do with the companies we work with is we help them build an operating model. This is a financial operating model that is going to take inputs as with respect to all aspects of the business. So revenue, it's going to project out revenue. It's going to project out the cost to service that revenue. It's going to project out your existing headcount, future hires. It's going to project out your revenue and anything related to growth, and how that revenue is going to grow over time, whether through named pipeline or potential pipeline in the future that we don't know, as well as take into account any sort of cash expenditures that are not on the P&L. So things like capital expenditures, things like debt servicing. So we're going to build a holistic model, and that model is going to really spit out a couple of things. It's going to spit out some projections around profitability. It's going to spit out some projections around cash. It's going to project some aspects of the growth of the business. Once you have all those things in one place and you have a good sheet of metrics, then that is really the tool that drives a lot of the conversation. We also may help you build a budget. A lot of businesses in the early, stages or low middle market don't have budgets to work off of. And if you don't have a budget, you don't really know if you're doing good or bad. Like I don't, and I think a lot of businesses can't answer that. It's like, well, we grew 30% last year. Is that good or bad? I don't know. How does it compare? Is that good? Is that good based on, did you grow 40% the prior year? Did you grow 20%? How did you grow with respect to your costs? So I think, some of this foundational stuff, a model, a budget, a forecast, these are aspects that you would expect any large business to have, any public business to have. Why would you not expect earlier stage businesses to have this plan and document? And you use that document to drive a lot of the conversations around growth. Can you afford a new hire? Can you afford this new office space? Is there a business line that's not efficient that you might want to shut down because it's not making money? Can we take on debt and put leverage on the business? Do we have enough cash flow to accommodate that? All those decisions are going to be driven off of the financial model and the projections that we work with our clients to build out.
Brilliant. I love it. So in a moment, I'm going to ask you about a Cinderella story of one of your clients. But before we do that, we're going to take a quick break.
Okay.
Are you running a business over 7 figures but still struggling with technology headaches? Pay attention, you do not want to miss this offer. This podcast episode is brought to you by Awareness Strategies, who is offering a custom-built digital adoption roadmap for anyone running a business over 7 figures who's wanting to grow their business in the next 5 years. And it's not just a roadmap, they offer full implementation as well if that scares the out of you. Check out awarenessstrategies.com/roadmap for more details today. The link's in the show's notes. Don't regret not doing this. Do it now. That's awarenessstrategies.com/roadmap.
So I am super excited to hear about your Cinderella story.
Great. Well, I think I have one. We work with a lot of great clients, all across varying industries, focuses. But we had one in particular that I think we were able to help deeply, and this is maybe getting into some of the weeds, but I'll try to keep the story as high level as possible. This is a business that focused on building data centers based in the Southeast. And when we started working with them, they were a bit disorganized. I think they were more of a mom and pop type business. They didn't really have an operating model. They didn't really have good tracking of sort of like project related metrics. So one aspect that they were doing that was incorrect is they were doing some incorrect tracking on project level completion, which is really, really important. If you ever think about companies that are building things, they're always trying to track sort of what percentage completion is this project. So we did a deep dive. We went to the client site. We worked with them, went project by project, and really started to understand that they were double counting some of the projects that they were completing. It became a real issue to the point that they had scaled up their costs way too high because they were sort of over counting the projects that they were working on. That led to some scaling issues within the business. And when we went sort of like line by line, deal by deal, contract by contract with them, we were really able to identify, okay, this is where we're at from a project completion perspective. There's some duplicity going on here. How do we cut this out? Not only just today, but also make sure that we fix this problem going forward. And that was a huge win for the client because that really helped them think about planning in a much better way. And we were able to fix that process for them just in terms of their accounting for the percentage completion in their projects. So I think about them now, they're really on a good track. They're lucky they're in a area building data centers that's a very sort of hot industry. But even businesses that are fortunate enough to be in growing industries, they have to make sure they're doing some of the nuts and bolts work right Otherwise, they can get into challenges with scaling, which is, things can turn really, really quickly if you're loading costs too much up in the business, if you're not accounting for what you're building correctly. So that's just one example of sort of our team coming in, doing a lot of the detailed work, and then having a really good outcome for the client where they really are right sized in terms of scaling their business going forward.
I, I am loving that because so many times I see business owners and they know something's broke, but they don't quite know why. They think they're on
Yeah.
top of it, and it looks like they're on top of it. They're grinding and doing the things, but
Yeah.
there's something hidden there. And I think too, the definition between growth and scaling, I think a lot of people, especially now, like scaling seems to be a trendy term. And it's like, you don't want to scale before you grow. Like it is a dangerous, dangerous place to be if you're not set up properly for it.
Absolutely.
Beautiful and
Absolutely.
wonderful when it works out, but terrifying every other
Yeah,
moment.
yeah, you can get in trouble on both sides of the coin for sure, whether you're sort of, you're not scaling the infrastructure of your business enough, or if you're getting overscaled and you're adding too much cost and you don't have the growth to support that. Both sides can be dangerous. Keeping the pacing is really important.
Thanks. So in 7 to 8 here, we're looking at kind of how do you take $1 million business and bring it into a $10 million or a 5 million, how do we get to those milestones of the 8 million or the 8 figures, the 9 figures? Is there, in your experience, things that people should be aware of when they're looking at kind of that next milestone, whatever that might be for them in their businesses?
Yeah, I think part of this is just around sort of the core planning aspect. If you're $1 million business today, and you want to get to become a $10 million business, okay, well, what does that mean? Does that mean, okay, it means I probably double my revenue 3 times in a row, or I double my revenue 2 years in a row and grow 50%. So I think first of it's like charting a course. That's really the first aspect, is like even imagining this is where I am today, this is where I need to get to. Okay, well, how do I get there? So it's like, where does that revenue come from? And then you start to think about a deeper level, which is, okay, I know what I'm going to do from a growth perspective. Is that growth, where is that growth coming from? Is that growth going to be coming from existing customers? Are we going to be working on just expanding existing contracts? No, probably not. We have to go out and win new customers. How do we go and do that? Is that through, and what is our mechanics? What's our go-to-market motion? Is that going to be through adding salespeople, or is that going to be through adding and increasing marketing? How are we going to think about new customer acquisition? What's that strategy? And then finally, within our existing sort of like business, do we need to think about adding on new service lines or new products? How do we think about that? Are we going to get from 1 to 10 just by selling, pencils, or are we going to start selling, pencils and erasers too? That I think you start to then chart and outline, okay, this is how we actually get there, and say, oh, I think, by the time we get to $6 million in revenue, the market's going to be pretty saturated, or it's going to be harder to grow. We may need to do some product extensions here. We may need to think about adding ancillary services to our current clients to expand wallet share. All of those considerations, I think, when you start to plan, that helps you chart the path of saying, okay, now I actually can see in a realistic way. And obviously, a plan is a plan. It's not going to go how you think it's going to go. It never does. But even the mechanics and the activity of making that plan, the thought process, that is sort of like the journey that you need to go on if you're going to be thinking about expansion and growth. That thought exercise is really important.
I love it. Well, I know our listeners are going to want more from you. How did they start that journey with you?
Oh, great. Yeah, sure. So anyone can find us. We're located, our company's located in New York City. They can find us on www.expogroup.com, or reach out to me directly. My name is Eric Fiegoli, and my email is eric.fiegoli@expogroup.com. If you have a question, happy to chat with you.
Nice. So absolutely, we will of course have all of Eric's links in the show notes. So go ahead, scroll down, click on the links, open up in a new browser because we're not done yet. So Eric, I get to ask you, at what point in life did you know you're special kind of crazy enough to think that you could become an entrepreneur?
I don't know if it was ever one moment. It's sort of like the boil the frog. It's you don't know what's happening until the water's too hot. I would say, but for us, I don't think Kevin and myself ever sort of had these huge entrepreneurial dreams, but we started doing good work for clients and we started growing the business pretty organically and adding team members and adding clients. And then before you know it, we had, a larger business. So I think for us and for anyone, I think some of the best businesses are sometimes created by accident. And in this case, it was, us just doing some good work and serving clients, earlier clients, and then sort of organically growing into some of that growth and new contracts. So I don't know if it was a light bulb moment. It was more gradual for me.
Beautiful. You have been absolutely awesome. As I said earlier, I could talk to you for days. So any last words for our peeps?
I don't think so. Just wish everyone best of luck and in your growth journey. It's very fun, and I hope people are not afraid to go for it and even fail. I think it's worth the challenge.
Awesome. Well, Eric, thank you for your time. I appreciate it, and I know how valuable it is.
Thank you. Thanks for having me, Michelle.
Awesome. Peeps, this is Michelle Nedelec. Thank you for being here with us today. Be sure to subscribe to the show, share it with your friends. We love helping entrepreneurs grow.
Are you running a business over 7 figures but still struggling with technology headaches? Pay attention, you do not want to miss this offer. This podcast episode is brought to you by Awareness Strategies, who is offering a custom-built digital adoption roadmap for anyone running a business over 7 figures who's wanting to grow their business in the next 5 years. And it's not just a roadmap, they offer full implementation as well if that scares the out of you. Check out awarenessstrategies.com/roadmap for more details today. The link's in the show's notes. Don't regret not doing this. Do it now. That's awarenessstrategies.com/roadmap.